quickly, right? So let's zoom out. And what we see is that, we see the big run up going into late 2021. We see a sell off all the way down until really around $100. Now, one thing I want you to understand really quickly is that Meta has missed several earnings. The last earnings they missed, however, the narrative that they created was that they were going to engage in a lot of cost cutting. And the cost cutting was going to put them in a position to where things that would look better on their balance sheet, because they were spending a lot of money on what we call the metaverse applications. We know now that they've changed some of the scenarios around Reels. They may not be able to monetize that as much as they thought they would. And when I'm looking at the chart, what I'm seeing is that we hit this low at around, let's say $95 to $100. We gapped up here. This was after the earnings. And then we just traded in this really, really tight range. We're still above the 200-day moving average on the yearly, on the daily. But we also see the golden cross with the 50 now crosses over the 200. Also, we have this big gap here. So we had the move up, and then we have the big gap down, right? We may eventually close this gap, because normally most gaps get closed. So that gap is around, let's say what, 250, all the way up to almost 323. What we want to try to ask ourselves is that, do we believe we're going to close this gap for next earnings, or are we going to continue to move back down? I don't necessarily think the earnings this time is going to be great either, and I don't know what narrative that they're going to be able to pull out of the hat to make people have confidence in this stock like they did on last earnings. And we saw a really strong aggressive move coming out of November. Buyers coming in, buying it up at higher prices. However, it's low-key kind of stalled out. Right? It stalled out in this range between, let's say, 173 and 200. And we traded in this range for a very long period of time. So the market has said, we at this current time can't justify paying over, let's say, $200, $205 currently. And we don't see anything that's going to really give us a narrative to where we should buy it at this higher price. This is also going to be a resistance level on this particular stock. So we've rejected that level multiple times. What we want to look for is, do we move up past that level, and are we going to move back to close back up this box, or are we going to move back down on earnings because it's going to be too expensive based on what people believe future earnings are going to be? One thing about Facebook is they normally do their best ad revenue third quarter and fourth quarter because of retail buying behavior. Now, we know we're in an environment to where higher cost of capital, it could impact consumer spending. It could also impact marketing, because Facebook makes their money by selling ads to marketers. However, the biggest time of the year for them revenue-wise, historically, is going to be third quarter, fourth quarter, because that's when people start doing a lot of ad spend. And because they're a bid-based platform, the more people that are looking to buy ads, the more they're able to rise the bids up, which means what? They make more revenue. Normally, the top of the year is the slowest time of the year because people are not advertising as much. That's something we want to take into account. Therefore, if we don't get to move up to that box by third quarter, fourth quarter, it could be third and fourth quarter that drives that move if we find out that, you know what, advertisers have run back into this particular platform. And so that's something that you want to see. So this, again, is going to be another wait and see play. However, a strong narrative that's very bullish could get us to go close that gap, right? Or if we keep failing this 203, we may potentially sell back down to this $100 mark, go up under all our moving averages. But I really think it's going to be based on how their earnings look. Also can be based on, we have these other, what I call social media companies, Snapchat, Pinterest, and also, which is not necessarily a social media platform, but they do sell ads, as Google. When we're looking at their earnings, what I want to find out is who's going to report first. And often what you'll see is that if Snapchat, which is pretty much almost a dead company now, but if they report that their advertising isn't doing so well, you can get what I call an overlap or a sympathy play on the downside to the other social media platforms. Because people assume, well, if Snapchat can't sell ads, but they can never sell ads, that means Facebook may have issues selling ads. It's the same thing with Pinterest. That's something we also want to look at. However, I believe eventually that box is going to have to get closed, but I just don't know what's going to close it. Hope you got some value from it. David W. Williams, also known as Diamond Dave. I'll talk to you later.